Hey everybody, this is Jonah of ForexRazor.com. Today is February 15th, guys. Been a little while since we've touched base. Just wanted to take some time, make a video here, give everybody a little bit of an outlook of what I'm seeing for this week. Had a lot going on, fundamentally speaking, over the weekend. I mean, we had the G7 meeting. We had the passage of this another fabulous stimulus package, which I'm sure will turn everything around in our economy. For those of you who don't know me very well, guys, I am somewhat sarcastic. But anyway, so that's what we're looking at here today. We've got some major things happening. Markets seem to be reacting. In fact, let's take a look right now at the Euro USD pair. All right, this is a 4-hour chart we're looking at, and this is kind of what we see as a reaction to the stimulus package and G7 going down here. We see this big gap in opening, significant drop here of about probably around 120 pips or so, top to bottom, and that's based on all this information that's come out over the weekend. We also have the potential of GM here going under in the U.S., so that's going to have impact as well. Technically speaking, guys, let's go ahead and pull out long term. We're going to do a rundown from top to bottom here. Obviously, we're in a downtrend on Euro, have been for some time. We tried to rally up here. This is creating our daily trend line. We've got a nice downward pattern still on a daily chart. There's your 200 SMA, your 100, and your 50. They're still in sync with each other, trying to get a little crossover here, but nothing major at this point. You still got solid support down here in the low 20s. Longer term outlook, guys, I think if we get in this area, it's a good solid place to buy. At some point, we will start seeing some dollar weakness, guys. There is no reason for the dollar to be strong long term. Just keep that in mind. It's just a matter of when the markets click, and when they click, I think you're going to see this thing move up as fast as you've seen it move down here. Let's pull down to a 4-hour here, and you'll see the same thing. We're in a downward pattern on the 4-hour chart as well. You got a nice trend line holding up here, and now this gap has brought us down right down to this support level, which we see right around the 2750 level here. And if this level goes, you probably will see some continued selling pressure. We might get back down into those lower end 20s, 23, 24, 25 on a breach of this 2750 on a 4-hour chart. So just keep that in mind. A 4-hour close below this 2750 level, we might see continued selling pressure there because this is a significant support level. You can see on a 4-hour chart this has been tapped once, twice, broke a little bit here, but still it's all in the same range. I mean, this only made it down, didn't break 27, so we're talking about 30 pips or so. This was right on it, and here we tested again. You can see this long wick, so there's buying pressure there, and we're sitting right at that level or right around that level currently. So let's pull down to a 1-hour. You can see again, still in a downward pattern. Same scenario. You can see this gap a little bit better here, and you can see this was a significant gap for this open, and with good reason. And one thing to keep in mind, guys, and this is not like a fact, but those of you who see this video in time, if you get a buy on the euro right around these prices we're looking at, it's not a terrible idea. And the reason is because when you get gaps like this, guys, they almost always retrace. I'm not going to make a statement that's going to say that they always retrace, but I will say they almost always retrace. And you'll probably see this gap fill in somewhere between now and Europe would be my guess. I don't think it'll even take till the U.S. session to fill in. Probably going to see retracement back up into this level, and when it gets back up in here, I would look to flip it around and look to sell it. So that would be my outlook right now. I mean, I'm actually considering the fact of putting in a buy right now, right around the 2770 level or so, putting a stop right below the swing low. Actually, wouldn't be a bad idea to get it below the 50 level, probably like 45, 44, somewhere in there for your stop, so you have that psychological 50 level. Also, with the support that we've seen through here, should hold up, and you should get a retracement back up, a good 100 pip move back up to the 2860s for 100 pips. Looking at a 15-minute chart, guys, you can see what we're talking about here with this big gap. And you also have the 200 SMA on a 15-minute chart sitting right around this level that we're talking about retracing to. And there's no doubt with this gap happening, you're going to at least see some retracement. Bottom line is that I think a bare minimum would be right around the 50% retracement level, which would bring us back up to about 28.25. So that is, in my mind, is a place where you might want to look to move your stop up a little bit. But I really think you probably will pull back up to the 200 SMA before the middle of the European session here. We're going to take a look at US yen. All right, guys, this is a US yen daily chart, and you can see we're sitting right on top of resistance right here. I mean, we're right at it, right around that 91.60 to 9200. We got a little bit of a downtrend. It's not a huge, substantial downtrend, but just remember this is a daily chart, so anything on a daily chart is going to have more of an impact than a smaller time frame. So looking at this, you've got a good potential here for a short-term sell. I think this thing will eventually break through this level. Let's look at a 4-hour chart to get a little bit better perspective. See, we have an uptrend forming here, but I'm looking at like a short term. You see this cap right here at 92? This level would be a good level for a stop. If you can get it to pop back up into the 80s or so, using a 20 pip stop, you might be able to get this thing to retrace back down to 91 before it pops back up, being able to bag somewhere between 40 and 80 pips depending on where you can get in. But that's just a concept. I think that we will probably challenge this. So the other side of this is on a breach of the 92 level, you can look to get long. This could very well continue up for quite some time, at least to test the 94. And I don't think we're going to get too much above that just because where the U.S. economy is, fundamentally, it's going to be hard for the U.S. yen to get up long term. But we can definitely get up short term because we've been down. And that's pretty much what we're at right now. We're kind of range bound with this pair. We've been bouncing off the bottom right around 88. Back up to these 90s on a regular basis, and then this one time we've popped up to 94, and I think we're probably going to pop up to 94, 95 again before we shoot down again, and I think we might even get lower than 88, guys. Y'all might think I'm crazy. A lot of people think, well, the U.S. yen is significantly oversold. I totally disagree. I think that the U.S. yen will probably continue down into the 70s at this point because the appreciation of the dollar and the strength of the dollar right now, it's extremely strong, but it's not strong against the yen. So when it starts getting weak, you're going to see the yen continue to strengthen. And I think we're going to start to see that over the next month, 2 months, 3 months heading into the summer. I think you're going to see oil pulling up. You're going to see the currencies pulling up against the dollar. Euro is going to pull up. Pound's going to pull up. Pound's already started to pull up a little bit, but I think you're going to see these things starting to move up in the same manner they were pulling down. Pretty fast movement. So let's pull down through an hourly. We can see the same pattern happening here of this uptrend support. But again, we also see that this is a nice little rounding cap for a good opportunity for a short-term short. Long-term long would be if you can get it back down along the trend line, you could look to get in long, and you might get 94, 95 out of this pair. 15-minute chart, you can see we had a nice upward movement, pretty sharp movement here, but you can also see that this momentum has ceased. We've broken through the trend line, come back to the trend line as resistance, and now we're pulling back off again. So my guess, see this 200 SMA? I think we'll tap it. Probably tap it and continue back up. So guys, that's pretty much it for today. Again, February 15th, we'll be back. Hopefully we'll be back tomorrow, guys, with a little bit of update and see how the market's really absorbing the stimulus package and also the G7 comments, guys. So y'all have a good one. We'll see you later.